course. We have our chief economist, Bob Koopman. We have senior economists, Coleman Nee, Alejandro Barajas, and Barbara D'Andrea Adrian. The Director General will give a brief opening statement. He'll turn it over to Bob, who will then give a brief overview, and then we will take the questions as they come in. Director General, the floor is yours, please.
Well, thank you. Thank you very much, Keith, and hello, everyone. You have all seen the press release, so I will keep this rather short to allow for some time for questions. And let me start by saying that the format of this press briefing is not the only unusual thing about this year's forecast. COVID-19 has completely upended the global economy and with it international trade. The pandemic is first and foremost, we all know that, a health crisis. We at the WTO are profoundly saddened by the loss of life that has occurred around the world. A number of our colleagues here at the WTO have fallen ill with the virus, and we share the anxiety that has shaken households everywhere. This pandemic is also, however, a major social and economic crisis. Millions of people around the world have already lost jobs and income. Our forecast reflects the enormous ongoing shocks to supply and demand. We project that trade in 2020 will fall steeply in every region of the world and basically across all sectors of the economy. In light of the uncertainty about the pandemic's precise duration and impact, forecasts are inevitably based on strong assumptions. So as a result of this, our economists, they have developed two plausible scenarios instead of the usual single set of numbers, the range. In an optimistic scenario, our economists see the volume of global merchandise trade falling by 13% this year compared to 2019. If the pandemic is not brought under control and governments fail to implement and coordinate effective policy responses, the decline could be 32% or even more, because again, let me emphasize that all these projections are highly uncertain given the large number of unknown factors at play here, including, for example, how credit market stresses are affecting the availability of trade finance. Nevertheless, these numbers are ugly, and there is no way around that. Comparisons with the financial crisis of 2008 and even the Great Depression of the 1930s are inevitable. And that is why I want to emphasize here very clearly that the underlying causes of this economic crisis are very different from the previous ones. Our banks are not undercapitalized as they were in 2008, for example. The economic engine was in decent shape, but the pandemic cut the fuel line to the engine. Now, if the fuel line is reconnected properly, a rapid and vigorous rebound is quite possible. Two factors, in fact, will determine the strength of our recovery. One is how quickly the pandemic is brought under control. And two, the policy choices governments make. Now, a strong rebound is more likely if policymakers show businesses and households reason to believe that the pandemic was a temporary, one-time economic shock. Now, to do this, fiscal policy, monetary policy, and trade policy, they must all pull in the same direction. A turn towards protectionism would introduce new shocks on top of those that we are currently enduring. Keeping markets open to international trade and investment would help economies recover more quickly. Our economists estimate that if the pandemic is brought under control relatively soon, and the right policies, of course, are in place, trade and output could rebound nearly to their pre-pandemic trajectory as early as 2021, so next year, regardless of how steep the initial fall is, and this is very important. But there are other scenarios in which trade volumes post-recovery would remain well below the pre-COVID trend line. It is worth remembering that even before the first COVID-19 case was registered, we were not making the most of trade's potential to drive growth. This new forecast we're issuing today confirms that global merchandise trade was falling at a significant pace in the final quarter of 2019. Now, the WTO is just one of many international organizations coming out with depressing statistics this week. As we confront what may well be the deepest economic recession or downturn of our lifetimes, we should aim to make the most of all potential drivers of sustainable growth to reverse this situation. Governments around the world can and must lay the foundations for a strong and socially inclusive recovery. Trade and international coordination more generally will be important ingredients here. Now, if countries work together, we will see a much faster and robust recovery than if each country goes it alone. So thank you all. That's what I have for the moment, and be ready for questions. Back to you, Keith.
All right. Now, Bob, could you give us an overview, please, of the report that was issued just a few minutes ago? Bob Koopman.
Hi, Keith. Thank you. Sorry about that. Can you hear me?
Yep.
Yep. So in the report, you'll see that we laid out the two scenarios that the DG talked about. I think a couple of important elements there is that if you look at what recent trade growth had been since the financial crisis, it was growing slower than the previous trend prior to the global financial crisis. The scenarios that we ran show a significant decline, and then generally recovery towards the trend growth rate of the post-financial crisis trade growth. One of the things that we're hoping is that the effectiveness of the WTO transparency and governments cooperating will allow the short-term measures that they may have taken to support their national health systems and the health of their populations will be removed so that global trade can get back on trend. The role of trade may be misunderstood here sometimes. Trade is going to be very, very important in terms of allowing countries to access supplies where they're available. No country can really stand alone and produce everything that it needs. Some countries have more capabilities than others. In our scenarios, we don't build in a lot of renationalization of supply chains and things like that. But what we do is incorporate increased trade costs. And trade costs can slow the recovery if they're not removed in a relatively efficient and effective manner. We see a wide range of results across countries. Those results are largely dependent upon the structure of the underlying economy. And so you see bigger negative effects in economies that have heavy concentration of services, particularly retail services and non-tradable services. But tradable services such as transport and tourism are also important drivers. So these service sectors are really hit hard by the lockdown, and they have knock-on effects in terms of GDP, income for many consumers, that then have knock-on effects into tradable commodities and goods like automobiles, dishwashers, smartphones, and things like that. We have a lot of research behind the study, and we have posted some details of the technical work that I think other economists and maybe some of the journalists out there will find of interest. We're working closely with other IOs to monitor the situation closely, and we will be working with them to refine and update our scenarios. And I think it's important that we come back to you on a more regular basis, not wait for 6 months to come back with a trade update, but we'll be trying to monitor this more closely and get back to you relatively soon with an update of the situation given the dynamics. And I think I'll stop there, Keith.
Thank you very much, Bob. We've got a lot of questions coming in. We don't have the Director General for very long. So what I would like to do is say for Bob and his economists after the DG has left us. So, Director General, there are a series of questions that pertain to this particular theme, but I think it's perhaps best expressed by Xin Ling from the Xinhua News Agency, who asks, has the disruption to global value chains brought on by the pandemic, is that a signal that perhaps globalization has failed? Does this crisis mean the end of globalization?
Well, thank you. Let me start by saying that we were, even before the crisis, in not great times for trade and international cooperation. It was a challenging situation to begin with. I think this crisis put a lot of things in question. I don't think that it should mean a reversal of globalization, but there are many questions we need to answer. Clearly, one thing that was put squarely before us is the fact that we have not been cooperating closely enough. And the fact that we have seen so many trade restrictive measures, export bans and prohibitions and limitations recently, that is not a good sign. When we look at the future, there are essentially two ways to respond to the fact that global supply chains were disrupted in the way that they were, and how that had an impact on production chains. The one thing could be done is to diversify supply chains. So instead of concentrating supplies internationally from one country or one region, we can do a better job by diversifying the supply, by introducing more players into the global supply chain. Another option that some seem to be thinking about is bringing the production home. So concentrating production within the borders of each country. Now that's almost very close. That's very close to an argument of self-sufficiency. Now, that I think would be the wrong response. It will be the wrong response for several reasons. First, because as I have said before, no matter how strong or how advanced a country is, they're never going to be self-sufficient. We have seen, for example, that trade on the products that are directly linked to the COVID-19 crisis is very strong throughout the world. It's about $300 billion worth of imports every single year. And just for those products that are very much connected to the COVID-19, forget medical supplies and equipment as a whole, that's about $1 trillion. So what we need to do, and that's only for the final products. If you take into account parts and components, that number would grow significantly. So that's not the right answer. The right answer is to cooperate, is to have international trade functioning properly. And in times like these, where we need more international coordination, make sure that those supplies continue to work and function as closely to normal as possible.
Very good. The next question comes from Sumaya Keynes from The Economist. And she asks, what differences do you expect to see between the nature of the trade collapse this time and the trade collapse in 2009? Are there any lessons we learned from that episode that could be helpful now?
Yes, there are many lessons that we could learn from that episode. First and foremost is the lesson that stimulus measures, if they are adopted timely, if they are well coordinated, they can work and they can have a real positive impact in the recovery of the economy. So fiscal and monetary measures that have been announced recently, they will help, and they're extremely important. They're not enough. I think we need also more market openness, more investments flow. All that I think is positive. But this is very different from the previous crisis, both 2008 and the 1930s. The other ones, they were related to the fundamentals of the economy. So basically, today, we don't have our financial markets undercapitalized, for example. We don't have huge asymmetries or problems with the fundamentals of the global economy. This is a health crisis, which is, because of the way that it's being addressed, causing huge shocks of supply and demand across all sectors of the economy in all regions. Now, that makes a huge difference. Why? Because regardless of how steep this initial drop may be, and we're looking at pretty hard scenarios, 13% in the optimistic scenario is about the same order of magnitude of the 2008 crisis. The other scenario, which is 30-some%, 32%, it's about the same size of the 1930s over 3 years, and we're having that in just 1 year. Now, the difference is that it is theoretically easier to reconnect and the engine to the supply of energy and get the engine functioning again as close to full speed as possible. So in some scenarios, even if we fall a lot, we can come back even in 1 year or maybe two, back to pre-pandemic levels of growth, both in terms of trade and in terms of output. So these are very different situations. And what we do need is to make sure that we don't make the mistakes of closing borders and impeding trade and making it difficult for investors and households to believe that we're back on track.
Okay, very good. Thank you. The third question comes from Assis Moreira of Valor Econômico, the Brazilian publication. The question is, how do you see the prospects for Latin America and especially Brazil in this totally new global context?
If we're talking about the crisis itself, a lot will depend on how the pandemic is going to strike Latin America, how long it's going to last, which countries are affected, the measures that are taken to revive the economy and support the economy. All those things are still to be seen, so it's difficult to tell. What is clear is that not only for Brazil or Latin America, what is happening today is an economic crisis of global proportions. And to the extent that we're going to see a recession along the lines of what we are projecting at this point in time, I don't think anybody is going to be immune. Everyone, even if they're not heavily affected by the pandemic, the global environment is not going to be helping any country or any region to continue or maintain the economic level of output that they were before the pandemic. So there is going to be a struggle for everyone to recover from this.
Okay, this question comes from Larry Elliott of The Guardian. He says, what three things would mean we get an optimistic rather than a pessimistic scenario?
Well, the first is make sure that the monetary and fiscal stimulus is in place. I think that would give us reasons for an optimistic view about the future. The second is work and hope that the pandemic is dealt with as expeditiously as possible, so that this does not prolong. People have been talking about a second wave or a third wave or whatever. The faster we can control the pandemic, the better it is for the future prospect of the global economy. Another reason for a positive view is if we see more and more coordination. And I think we are beginning to see that. International organizations are working more closely. Even governments themselves are beginning to coordinate in terms of making sure that restrictions to trade and to flow of medical equipment and supplies is not disrupted unnecessarily. The G20 leaders and subsequently the G20 trade ministers made a strong call for such restrictive measures to be limited, so targeted, temporary, transparent, and all those things are very helpful. If we also set the stage for a proper recovery, for example, keeping a business-friendly environment and an investments-friendly environment after the pandemic, so that companies and investors and households and consumers feel positive that this is over. Let's resume our natural and routines. That is also another reason to be positive. So there are many things that we can do to share the positive light about the future.
Okay. Hannah Monakin from Inside US Trade asks a question that's a good follow-up to this. She says that you say that a rapid and vigorous recovery is possible if countries make the right decisions now. What are examples of decisions they should be making to eventually lead to recovery? And particularly, how important will the decisions of major economies like the US, the EU, and China be in whether we see the optimistic or pessimistic scenario?
Well, I already mentioned a number of them. Let me say just a few more. I think one of the things that we should bear in mind is that even before we hit the virus, we were already not doing great, particularly in terms of trade expansion. We saw in 2019 actually a decline in trade of 0.1%, so that's basically zero. We were stagnating. And in the last quarter of last year, those numbers were high. So we were actually going into a fall for trade already, even before this happened. And that was largely due to uncertainties that we had been seeing in the international economy, to the trade tensions that were out there. And it would be great if we could come out of this reverting a lot of those tensions and of those problems that we were seeing even before the crisis hit.
And the importance of the decisions taken by the major economies, US, EU, China?
Oh, a lot of them. On two things. I think if we can break down this conversation in two parts. And the first part is fighting the pandemic. So more coordination, less trade restrictive measures, making sure that we are responding properly by supporting small businesses, the consumer, those who are going to be unemployed, reducing the level of stress in the economy and in society is very important at this point in time. Those economies can set the example for that. So that is in fighting the pandemic. The other part is setting the stage for after the pandemic. A lot of what we do now is going to determine how fast we're going to recover the economic levels of activity that we had before the pandemic. And of course, again, those economies are extremely important here. So those fiscal and monetary stimulus measures are going to be very important. And it will be very important also that we have enough openness in the global economy so that one country benefits from the leverage that the other is offering, so that we pull each other up and not hold each other down.
Very good. I know, Director General, your time is very precious here, so I'll just pose one more question to you. It comes from Amity Sen of the Hindu Business Line, and Amity asks, will developing countries and LDCs need more help to get out of the COVID-19 crisis, and can the WTO play a role in this?
They definitely would need more help on several fronts, not only on the economic front. So, for example, heavily indebted countries, I think, should deserve more attention. We don't want credit lines to be suffering here. We need those countries to be in a position to adopt stimulus measures, both fiscal and monetary, unencumbered by obligations, particularly in terms of debt, that can be maybe restructured or reorganized. Not only that, these are countries that have special challenges in two very important fronts now. The first one is health systems. Their health systems are usually not as robust, not as prepared for a pandemic like this, and often they don't have the equipment, they don't have the supplies. We have to help them when the time comes, and the time is now. They have to have support to revamp their health systems. The other area where they need help is they are very vulnerable in terms of social security nets. And this is a moment when measures which are important and necessary, like social distancing, are shutting down important sectors of the economy, and the number of jobless people is going to rise considerably in those countries. It's important also that they get the kind of support that allows them to put in place the measures that are necessary to support their citizens and those who are losing their livelihoods, and in particular, the small and micro enterprises.
Director General, thank you very much for your participation. I know you're very busy. Thank you again, and we'll talk very soon.
Thank you.
Okay, we have more questions here. Some of them are of a technical nature, which I'll direct to Bob. And Bob, you can pass these on to your colleagues as you wish. One of the questions comes from Bryce Bashuk of Bloomberg, and Bryce wants to know. Let's see if I can find his question here. He says, where is he? Sorry about this. He says that if you look at the Services Purchasing Management Index, it seems to be particularly bleak. It's bleak for manufacturers, but even more so for services. Do you believe that these bleak PMI figures point to a greater likelihood that the pessimistic scenario will come to fruition? Bob, that's
Thanks.
for you.
Thanks, Keith. I'll make an introductory remark to that and then pass it to my colleague, Barbara. One of the reasons why that services PMI is so bleak is because services are very hard hit. Tradable and non-tradable services are very hard hit as a result of the health-related lockdowns. The good news is that there can be a relatively quick recovery if consumers and businesses aren't psychologically scarred as a result of the pandemic. So the good news is all the infrastructure remains in place for firms and businesses to be up and running once the lockdown is done, as long as governments have been providing the appropriate support and liquidity to both households and services. So I think that it's emblematic of how widespread, both globally and cross economy, the pandemic effects have been. But let me now ask Barbara if she would like to weigh in on that. Barbara is our services expert.
Barbara, floor is yours.
Yes, thank you, Keith. Yes, indeed. The impact on services trade of the COVID-19 outbreak is simply devastating because it's sudden and it is abrupt. And this is also because of the spatial nature of services, because services, unlike goods, they cannot be produced, stored, and consumed at a later stage. There is no storage of services. So, and this means that the money loss by the services sector, for example, for a missed holiday season, for canceled flights, for multiple cancellations of recreational sporting event, it will never be recovered. So this is what the PMI, the services PMI is suggesting. And we know that the impact of the virus on services is hard. Yesterday, the ILO released updates on the impact on global employment, and the hospitality sector, the artistic sector, the recreational services are those sectors which are going to suffer more. There will be losses of employment worldwide.
Very good. Nous avons une question de Richard Io des Echos. And Richard's question is, would you say that today the role of the Chinese economy has taken on too great a weight in global value chains? Bob, I think that's for you.
Thanks, Keith. Well, I wouldn't characterize it as taking on too great a weight, although I think depending on which government you are or what you feel your vulnerabilities are, you may feel that way. What we have observed is that the Chinese economy has been diversifying and moving up the value chain. And we've seen the spread of value chains out of China into other parts of the world, particularly as a result of some of the policy uncertainty, but it was happening even before the policy uncertainty of the last couple of years, where countries like Vietnam, Cambodia, Laos, Malaysia, Indonesia, Mexico were seeing firms making investments to either produce parts and components or do assembly that had been happening in China. So I think what we were seeing is China was on a path to moving up to higher levels of the value chain around innovation and also focusing more on its domestic services market and producing goods for its potential fast-growing domestic market. So I think a key indicator that we're going to want to see here in the Chinese recovery are Chinese consumers going out, and are they buying cars again? Are they buying phones? Are they spending money and going out to restaurants like they were prior to the crisis? I think that'll be a very early indicator of how fast countries can recover from the lockdown.
Okay, that's very good. Thank you. I have a question from Philip Blenkinsop of Reuters. And Philip's question is, it's a little bit similar to one of the questions we had before in terms of giving a sense of what you may have factored into an optimistic scenario and a pessimistic scenario, and what is your view about the initial responses of some crises, of some countries in this crisis, particularly with respect to restrictive measures regarding medical supplies?
Thanks, Keith. Good question. I think one of the main elements here is for a quick recovery. I think the DG summarized it very well. We need coordinated action. We need countries to pay attention to fiscal policy, make sure those fiscal policies are targeted to those households that need the income the most, paying attention to small, medium-sized enterprises and making sure that they have liquidity to draw upon to open back up. Coordinating those actions across countries so that countries can experience sort of the dynamic feedback effect of the recovery and not just trying to husband that recovery for their own purposes. So I do think that those are some pretty key indicators as to whether or not we start moving into the optimistic scenario more quickly. In terms of the kinds of actions governments have taken, I think many of them are understandable. There's concerns, governments are accountable to their voters. And so they're trying to take steps to deal with the very immediate nature of the health crisis. This does indicate, I think, that governments need to do a better job of planning for these kinds of pandemics. And there are ways that trade, by the way, can play a very helpful role in ensuring in the future that there's efficient responses to these kinds of pandemics, diversifying supply chains, as the DG mentioned, both domestic and internationally. But keep in mind, if you try to do this all domestically, that you're likely to be allocating scarce resources to relatively high cost production that somebody else could do better. So one way to ensure that you do this efficiently is plan for the next pandemic or natural disaster. It could be a hurricane, it could be an earthquake, it could be an industrial accident that hits your domestic supply chain, not just your international supply chain. So you need to think about how do firms manage their inventories. Maybe they need to have a little bit more flexibility, both in terms of diverse supply sources, but perhaps they carry a bit more inventory than they've been using recently. And also for governments to ensure that they have emergency stockpiles that have been efficiently purchased, that you buy the stockpiles that you put in there in a cost-effective manner and then manage those inventories to keep them fresh. All of those things, I think, would help ensure that in the future, governments can respond efficiently and effectively, more efficiently and more effectively to this kind of crisis. Thank you.
Okay, very good. Thank you, Bob. So we have one more question. We have a little bit more time. If there are more questions, please send them in very, very quickly. But let me pose the last question that I have to you, Bob, and to your colleagues. And it's another question about Brazil, but I think it's from Jamil Chade of UOL. And it's a more sort of, he wants a little more detail on the perspectives for Brazil, since the report points to a fall in GDP in the Latin American region of 11%. So do we have anything more to add to what the DG said earlier on Brazil?
Keith, I'll introduce that and then hand it over to Coleman. But I think one of the things in our analytical work to build up the shocks, we see that the countries that are large natural resource exporters have been adversely affected, but they can recover pretty quickly if global markets get back on track and demand recovers for their products. And many natural resource activities use a lot of capital equipment. That capital equipment is still available, but they need a healthy workforce to extract those resources. And then, big, large developing countries like Brazil also have a very vibrant services sector, and getting that services sector back on track would be very helpful. I don't know if Coleman wants to weigh in on this. Coleman?
Coleman?
Sure. Thanks, Bob. Thanks, Keith. And thanks for the question, Jamil. Both scenarios, the optimistic scenario and the pessimistic scenario, have South and Central America experiencing the biggest decline in GDP of any WTO region. And this is generated out of, we had to approach this forecast in a different way this year because the available GDP data were not fully reflecting the severity of this pandemic. So we generated our own numbers through a general equilibrium model, which is a new approach. We had different scenarios, whether it's mostly dependent on the length of time that it takes for the pandemic to be brought under control. But South and Central America is quite severely affected on the GDP front. And these, the approach that we use to generate this are based on plausible assumptions about the interaction of increased trade costs, reduced labor supply, and falling demand in major markets. And so that's what generates the GDP numbers, which then get fed into our trade projections. So there is a technical document, if you're interested in some of the details, that should be downloadable from the WTO website and could be more informative.
All right. I'm going to use, sorry, yes, go ahead.
Yeah, just I would also like to add up something regarding Brazil and also maybe build up on something that the DG had already said. It's about the situation in Brazil during 2019. So we have seen already that Brazil has been going through economic slowdown that can be actually seen through a reduction of its imports. Was a positive growth for 2019, but we have seen that from 2018, which was a growth of 11.2, to a 2.2 growth in 2019. In 2019, it's been quite a drop. So that's one part. And second of all, exports from Brazil were already affected by a regional phenomenon, mostly focused on Argentina, where there's been a recession. So we've seen that actually exports, auto exports to Argentina have been hardly hit. So there's been actually already a condition, a precondition for Brazil to have a lower result for 2019, and perhaps that also weighs in the considerations we're taking for 2020 and 2021. Thank you.
Alejandra, can I use my privilege as moderator to pose another question to you?
Please.
And that is pertaining to the results of 2019. As the Director General said, and as our report clearly indicates, trade was not doing well last year. It declined both in dollar terms and in volume terms. And the fourth quarter was particularly difficult. Can you give us some indication as to why we had such a difficult year last year? Was it about the trade tensions? Was it about economic sluggishness? What was the reason behind the difficult year in trade in 2019?
So I think definitely one point has been the trade tensions. We can see that actually the regions that were more affected since half of the year 2019 have been North America in particular, and Asia. Normally, we also see that every year we could see a phase of recovery for when I mean every year, it's actually the fourth quarter of every year tends to be a recovery for every region. This wasn't the case for 2019 Q4. So we've seen actually that trade was down by -1.2, which actually hasn't been the case in the past few years. So this is actually something that we definitely see. So we had some signs of alert that definitely trade tensions were weighing in. And also in the case of South and Central America, we have also seen that there's been a slowdown, economic slowdown around the region, so that can also weigh in. So we see definitely for South and Central America, Argentina has been one factor.
Thank you very much. The last question comes from Bill Maudlin of the Wall Street Journal. He says in Washington, there's a conversation about export restraints on certain goods, such as medical goods. Do WTO and GATT agreements allow for this? And economically, does it make sense to build up domestic production in these areas? I think I'll answer this one. The Director General did speak to a certain extent about the importance of cooperating. It's understandable that governments would look first and foremost to protect their own people. And the question is how best to do that. WTO agreements, Article 11, for example, in GATT, does allow governments to restrain exports if it is in the national interest. But what's very clear, both with this article and with the national security article and with the article to protect your populations, Articles 20 and 21, what they say very clearly is these measures must be targeted, temporary, and they must be transparent. If all of those things are true and they're time limited, then this is all right. But the problem that we're seeing is, as the Director General said, no country, no matter how powerful, has enough resources to produce everything they need, whether it's medicines, medical products, or health services. So the importance of cooperation here really cannot be underestimated. Would anyone like to add to that?
Keith, could I?
Sure, go ahead, Bob.
Yeah, so I think it's really important to realize that just because you have the capability to produce something doesn't mean that that's a good use of your resources. If you recall, one of the great insights that this famous economist Ricardo had was that you should use your resources to produce things that you're relatively good at, and let other countries produce things that they're relatively good at, even if you're better at everything than they are. And I fear that when you look historically at countries that have tried to be self-sufficient, in the short term, sometimes they have a burst of growth as investments are made in these sectors and resources are reallocated. But when you look at the medium and long term, you see much slower growth in those countries. So countries that aim to try to do everything themselves end up with much slower growth over the long term, and they fall behind the global production possibility frontier, the capability frontier. And so it may seem attractive in the short run, but the science of economics and the logic of economics says you should be very careful about trying to produce everything yourself, and that you should try indeed to build on the capabilities of other countries and cooperate. Thanks, Keith.
Thank you, Bob. Okay, this is our last question. It comes from Gabrielle Sotomayor from the Mexican news service Prochesco, and she wants to know about the forecast for Mexico in terms of trade and economic growth in 2020.
Coleman?
Unmute. Thank you very much for the question. We do not produce separate forecasts for individual countries, but Mexico is part of our North America region. And so North America is quite strongly affected, both in the optimistic scenario and the pessimistic scenario on the export and import sides. So Mexico will really feel the impact of this crisis. But the most important thing is that the pandemic be brought under control as soon as possible, and that will mitigate the impact of the crisis and allow a faster recovery.
Coleman, many
Keith,
thanks. You sure, go
Keith,
ahead.
could I just add one thing? Sure.
Sure.
If you look at the technical document, you'll see that we do have breakouts on GDP estimates, and Mexico is broken out. So in the technical document, which does inform the trade forecast, the technical document has GDP estimates at a more granular level, and you'll see that Mexico is indeed one of those countries that, in terms of GDP, by the scenarios that we estimate and the various mechanisms we put into the model, have relatively significant, larger effects than other countries.
And that can be found on the website as well as the forecast. Thank you very much to all of our panelists. Thanks to all of you for your participation. Please stay safe out there.